What's good everybody, and welcome to today's new video, where in this one we're discussing the number one thing new ICT traders can do to help improve their win rate and help improve their trading quickly. Now this is a very simple thing, and it incorporates market structure shifts and the idea of displacement. Now this trick, as I said, incorporates market structure shifts. Now what we're focusing on is how quickly and how far the leg down that gives us our market structure shifts actually goes. So in this example up here, you can see we have a swing low. Now when we trade into this higher time frame PD array, which is to our left, we have a higher time frame PD array, we want to see a shift in market structure. Now I look for this shift to occur below swing lows. You can see this swing low is the next one from this leg up. So we lag around a bit, and what I often see ICT traders do is they will drop to a much lower time frame and not wait for this shift to occur. So they will be trading all of this price action, looking for sells, and keep getting stopped out by these wicks. Whereas if they just waited for displacement, they wouldn't be stopped out, and you can drop down to a lower time frame to find an entry inside here. Now if you notice here, we have the swing low here, which gives us our market structure shift. We don't break below it until we do with speed and distance. Notice how far we break below this with this 1 hourly candle. Look at the distance on that candle and the speed it does it with. This price action is stagnant, and then all of a sudden price drops and drops again. Inside this wick would probably be our entry, and you can drop to a lower time frame, and I'll show you how to get an entry within this. As you guys can see here, we are on the 5-minute chart on the same USD example, and this is our hourly swing low that we are waiting to be broken. Now if you take your eyes to the right hand side here, if you notice, we don't trade below the low yet, and then we have a leg up, and then the speed and distance comes into play. Look at that energetic move down below this low. Once I see this, we would start hunting entries, and then if you take your eyes to the last up close candle before that move happened, which is our order block, you can see that price retraces into the order block, respects the mean threshold of it. What is a mean threshold? We take the range of the order block, split it in half, and that is our mean threshold. You can measure this with a Fibonacci tool, but I'm just doing it with the eyes. So I can see that we rejected the 50% level and then closed below that. That gives me my signature in price to say we have the speed and distance lower, we retraced, closed outside of the 50% mean threshold, and now we are heading lower. And as you can see, after the energetic move, instead of all of this stagnant price action or distortion waiting to break the swing low, we finally do so, get a nice retracement, and then the leg lower happens. Now my question to you is, would you rather be on this side of the market where this move is happening, or would you rather sells inside here and have to sit through all of this rangy price action? Notice inside here, look at the range we're in. That is not a range we want to be looking for if we want to be trading these energetic price moves where we get in the trade and price quickly runs to the target. To be able to trade these moves, we have to incorporate this little trick of speed and distance. And once we see that come into the market, we can then look for entries. Now the displacement actually happens because institutions are entering the market. When a ICT always uses the example of a kid's swimming pool, and if you chucked a bear into the swimming pool, displacement would happen. All the water would fall out. That is what's happening inside here when we get a massive leg lower. Big institutions are entering a market, which sends it lower with this sort of speed and distance. We measure how far we go instead of if we just wick below and then come straight above. That is not our market structure shift. How far we go below the low, and then we measure how quick it's done. Notice this was in 3 candles. We ran quickly down. That's because something big is coming into the market. And then we look for our entry and run lower. Now I will find another example of this for you, and we will use the replay tool to be able to find an entry using this sort of idea of speed and distance. You can see the next example. I want to start on British pound, and I want to take you down into a lower time frame chart after the 1 hour to be able to find an entry. Now, our framework, as you always need framework when entering a trade, our framework is a rejection block. Why is it this one and not this one? Because this is the highest close. So we have our rejection block here, drag it across and price trades into the rejection block. Now, our next draw on liquidity after trading into the rejection block would be the low here and these lows down here. So we are bearish, right? And we are going to dive into the 5-minute chart inside this rejection block to try find our entry, utilizing this idea of speed and distance. Now you can see here we are on the 1-minute chart. We have an original consolidation down here. This line here is our rejection block. Now remember what we're looking for. We're waiting for a swing low to be broken with speed and distance. If price does this, where we lag around for a bit, just dip below it and then shoot right back up, we're not interested in that. This is what we're looking for. Some movement like that, where we have a huge leg lower, and that confirms our shift in market structure. So that is the tip that I'm referring to, is just wait for the displacement to happen in the market and you will take many fewer losses. So if you look over here, we have our original consolidation, and then we have a return to consolidation, more accumulation, and then the smart money reversal. Now, if we take it forward to try look for an entry, remember we're looking for displacement. So until we get that, we are not interested in sales. As you can see, we're lagging around right now. You may see here, we've broken the swing low, technically. We've come below the swing low. However, I'm not interested yet because we wick straight above. There's no displacement here. We want to see a big run below. We take it forward. Now we're starting to run below, and that is the sort of run I want to see. Now, as for scouting entries inside here, you can see that we have this fair value gap already respected. So I would have missed that entry here, which is a valid entry. Now we're going to wait for price to create another leg down inside this area here, and hopefully we can find an entry to target the liquidity down here. As you can see, after this candle closed, we have a small little fair value gap which lines up with the overall rejection block. Now our sells would be from here. I'll put my stop loss above this high here, and then take profit at around a 1 to 2. Simple trade. Remember, framing the speed and distance. It's all framed around this speed and distance below the swing low. That is a nice move lower rather than a little wick down here, and then some of you might be trying to buy this up close candle. However, we wait for the strong displacement. Price wicks in, we move lower with big candles and then smash our take profit. Now remember, the key to all of this is this price leg here, and then we scout an entry. We don't look for these entries until we break with speed and distance. You could, of course, look for a higher risk to reward, but I trade, for me, I find it works perfectly for me. I trade a 1 to 3 or a 1 to 2, and that is all I aim for. And that now brings us to the end of this video. If you did enjoy, please do drop a like and subscribe. Leave a comment if you have any questions or anything. As always, you can find a link to my social medias in the description below. And yeah, I hope this tip did help. And always remember to look for the speed and distance within the market, because as smart money traders, we want to be on side with smart money. Smart money doesn't enter the market or doesn't tip their hand until we see this displacement within the marketplace. So when you see this, you can anticipate the price will trade in your anticipated direction. So yeah, if you did enjoy, please do drop a like, and thank you for watching. I'll catch you soon.